This is a debrief for AAT's sample assessment number 1 for drafting and interpreting financial statements. In this debrief, we're going to look at tasks 1 and 2 together because they both share the same data, and it's going to be most effective for you in your assessment to attempt both tasks at the same time. As you can see, we're provided with a trial balance. Some of the trial balance numbers will appear in your answer to task 1 and some of them in task 2. However, the trial balance is incomplete or wrong, and we're also provided with some further information. And these items of further information will require a double entry. And it could be that the debit may be relevant for task 1 and the credit for task 2. And therefore that's why we need to do both tasks at the same time so that we can keep the double entry flow going and we don't, by mistake, miss out either a debit or a credit. So let's see what other information you would get in the assessment. So we've seen there's a trial balance, we've seen there's some further information. The assessment also provides you with a table for you to complete your answer for the statement of profit or loss. There's also a table for the statement of changes in equity. In task 2, you're also provided with a table for the statement of financial position. Task 1 and task 2 also provide you with a number of workings. So this allows you to add together some of the numbers they're providing for you in the requirements. You also get scrap paper in your assessment as well, and you may find it useful to prepare your answer on the scrap paper and then transpose the numbers from your scrap paper into your final answer. In our video, we're showing you a combination of what you can see on the screen, but also we've got plenty of white space here to replicate what we might be using the scrap paper for. So in your assessment, we need to focus on earning the easy marks as quickly as possible, and the best place to start is using the trial balance. The exam software provides you with a highlighter tool, and it's useful for you to highlight the numbers as you use them as a way of testing your project management and keeping control of what numbers you have used and what numbers you have not used. In the trial balance, each of the figures here have already been affected by a debit and credit. We can see that at the bottom of the trial balance, the numbers agree with each other. So we can see that all the debits and all the credits agree with each other. So each of the numbers in the trial balance will appear in our answer once. However, for the further information, a double entry will be required here. So each of these numbers will appear in our answer twice. Remember, it could be in either task 1 or task 2. So let's work our way down the trial balance and put these numbers somewhere into our answer. It could be that they will appear either in the final financial statements or it may appear in one of the workings, but we need to make sure that the number appears somewhere. So the first number we have is property, plant and equipment for cost. So that's going to appear in our statement of financial position. Let's have a look at the table they've given us. So we can see there's the table, but there's lots of blanks here. So for our property, plant and equipment, we need to choose that from the drop-down menu under the non-current assets. So we're using an abbreviation here to save time for this video, but in the drop-down menu, it'll have the full title of property, plant and equipment. So we have a choice now. We could put the number directly into our answer here, but let's see if there is a working for property, plant, equipment. Oh, and yes, there is. So we can enter into the drop-down menu. So we'd be putting cost here, and we've got a cost of 8362. So we've used that number. So that means in the question, using the highlighter tool, we can highlight that number to tell us that, yeah, we've used it. We don't need to use it again. Next, we have accumulated depreciation, which is at the year end. So notice that the question told us when our year end is, and this is our year end, which means we don't need to calculate depreciation in this particular question. Although in your assessment, one of the further adjustments you may need to make is to calculate depreciation. And the hint will be that in the trial balance, it would give us a date from a year ago. So this would be 20x0 rather than 20x1. And that's telling us, oh, well, we need a further year of depreciation. So here's our accumulated depreciation of 3716, and that's going to go into the same working as we had before for property, plant and equipment. So we have our accumulated depreciation, and it's 3716. Although this is going to be a negative number, isn't it? Because we deduct the depreciation from the cost to give us our net book value. Notice that there is a total provided in the workings, and these will automatically increase as you add more numbers. But in our debrief, because we're just using some screenshots here, that's not happening. Okay, so we've used that number, so we can put that, highlight that in our trial balance. We've used it, so that means we don't have to look at it again. Next, we have trade receivables of 679. So that's another figure that's going to appear in our statement of financial position. So is it going to appear in our current assets? So again, notice that we've got some drop-down menus here. So we can actually complete these. Remember, we want to earn as many marks as quickly as possible, don't we? So we could complete these other drop-down menus here. So we're going to have our inventory. We're going to have our receivables. And we're going to have our bank. So we're going to choose those from our drop-down menus there. Remember, for current assets, these are normally presented in the order of liquidity, with the least liquid first. So inventory may take perhaps 60 to 90 days before it becomes cash. Receivables, 30 days to become cash, and bank is cash already. So they normally appear in that order. And then for equity, to earn some marks now, while we're looking at this, we'd have our share capital, we'd have our revaluation reserve, and then we'd have our retained earnings. Again, I'm just using abbreviations here to save a bit of time, but in the exam, you just choose from the drop-down menu. Now for our non-current liabilities and current liabilities, I'm not sure what we're going to see here, but we're likely to see trade payables as one of the current liabilities, but I don't know what the other one will be at the moment, so we can't select that yet. But anyway, we were looking at receivables, weren't we? So should we put our number straight into the answer here, or should we use working? Let's see. Yeah, there is a working, so let's use that. So yeah, we've got our receivables from the trial balance, and they've given us a figure, haven't they, of 679. So we can highlight that in the trial balance now to tell us that we've used it. Then we have prepayments of 81. Well, normally prepayments aren't particularly material, so they would be aggregated with trade receivables. So let's put that into the same working. So we've got our prepayments, and that's 81. Then we have cash at bank of 56. So let's highlight that because we're going to use that now, aren't we? So let's see, should we put that straight into our answer, or should we put it into our working? Well, there's no working available for cash at bank, so that's a suggestion that we can put it straight into our answer. Okay, next we have share capital, and we have £1 ordinary shares here. So this all relates to equity, so we need to put these figures into our statement of changes in equity. So for our share capital, we have 3240, and we can put that's our opening balance, 3240. So if there were any sales of shares during the year, then this figure is going to increase. We've used that figure, so we can highlight it using the highlighter tool to tell us we've used it. We don't need to look at it again. And then we got retained earnings. Now notice for retained earnings, it has given us the figure at the beginning of the year. So we'll need to increase that with any profits that we made in the year. But again, we can put that into our statement of changes in equity, can't we? So the number 639. So retained earnings at the beginning of the year, 639. So we've used that number, we can highlight it, we don't need to look at it again. Then we have a bank loan repayable sometime in the future of 900. So notice the date. Again, the date is there for a reason. It's significant because it's telling us that that is a non-current liability. So we need to put that in our statement of financial position. Again, let's check whether or not there is a working for this. So no, there's not. So we can put that into our answer. So it's a non-current liability. We have a loan and it's 900. So then we can go back and highlight that. And we've completed that entry now. We don't have to worry about that again. Then we have trade payables of 641. So that's going to be a current liability. So we've entered trade payables into our answer. So should we put the number straight into here? Well, let's see if there's a working available. And yes, there is. So let's put it into the working. Remember that if you make any mistakes in your calculations, the markers will look at your payables working to make sure that it's okay. So you can still earn marks for using the working even though you may not have the correct final number in your statement of financial position. So anyway, so we've got payables of 641. So let's go back and highlight that. Next we have corporation tax of 17. Okay, well I'm not really sure what to do with that. Is that an expense? Is that a payable? So I'm going to leave that for now and I'll come back to it. So I'm not going to highlight it, and that means it's going to be easier for me to spot later on that which numbers I still need to look at, because it won't be highlighted. Okay, next we have sales. We're moving on to the statement of financial performance now. So we have sales of 8754. So again, we need to make the same decision as before. Should we include that straight away in our revenue figure here, or possibly there may be some working? And oh yes, there's a working. So let's look at our revenue working. So we've got sales of 8754. So we've used that number, so we can highlight it. And then we've got some sales returns as well, so we need to deduct that from our sales. So that's 35. Let's put that into our working. So we've got our returns, and that's 35. Next we have our purchases. So purchases are part of our cost of sales. So let's put that number into our cost of sales working. So remember, cost of sales are going to form opening inventory, and then we add on purchases, and then we're going to be deducting our closing inventory. So we've been given our purchases here of 5289. So now we can highlight that. We've used the number. And then we have purchase returns of 43. Well, these need to be deducted from our purchases. Yes, that goes into our working. And then we have inventories. So notice we've got inventories again at the beginning of the year. This is our opening inventory of 940. So that can also go into our cost of sales working. So we've got opening inventory of 940. And we can highlight that. So you've got distribution costs of 738. So again, do we need to put that straight into our answer? Notice we've got distribution costs appearing as a line in our final answer, but let's see if we've got a working for it. Oh, yes, we do. Okay, so we can put that in, so I guess there must be some adjustments. So we've got our distribution costs of 738. You can highlight that figure now. And we've got administrative expenses, so we can put that number into our workings as well. Okay, we've got our admin expenses of 1456. We have interest paid of 64. So again, let's see whether or not we can put that straight into our answer. We've got finance costs appearing there. And then in our workings, well, there is no working for finance costs. So that would suggest that we can put that figure straight into our answer. Remember, this is going to be a cost, so we want to show that as a negative number. But though, pay attention to the instructions in the assessment. Sometimes it will tell you whether or not it should be shown as a negative number or not. So yeah, we've used that number, we can highlight that. And finally, we've got dividends paid. So remember, dividends do not meet the definition of an expense under the International Financial Reporting Standards. So a dividend is an appropriation of profits. So that means this is going to be shown in our statement of changes in equity. So notice we've got a line appearing there for dividends. So we're going to show the dividend as a reduction of our retained earnings. This is a distribution to the shareholders. It is not an expense. Okay, so we've used that number. So again, if we have a look at our trial balance now, we can see that we've used all of them apart from the corporation tax. So we need to come back to that number. We're not really sure what that is at the moment. Right, let's move on now to the further information. And remember, we need to apply double entry for each of these. So first of all, we've got inventories, and notice the date there. This is at the end of the year now. So for our closing inventory, the double entry, we need to debit our inventory asset in the statement of change, in the statement of financial position, and we'll credit our inventory in our cost of sales. Okay, so the figure is 841. So we need to debit the inventory asset. And let's see if there's a working for that. No, there isn't. So we can put that number straight into our answer in our statement of financial position. So we have inventory of 841. So notice I'm using a different color now so that when you're watching this video, you can differentiate between the numbers that appeared from the trial balance. Those are in green, and then the numbers from the adjustments are in purple. Okay, so there's our debit, but we also need to have our credit as well. We're going to be crediting cost of sales. So we're going to have our 841 appearing as a negative number in our cost of sales working. Okay, so we've done the debit and the credit for that. So I'm satisfied, I've finished that. I can now highlight that number as well as part of my project management. I need to keep control of what numbers I have used and which numbers I've not used. Next, we have an invoice for 24,000 in respect of marketing costs for the period 1st November 20x1 to 31st of January 20x2. So notice that those two dates straddle our year end. So it'd be useful for us to do perhaps a bit of a timeline to understand what's going on here. So we have our year to the end of December x1, and then we've got this invoice, and the invoice covers this period. So we can see that there are 2 months that are part of our accounting year, and there's 1 month that is after our accounting year. and it tells us that there's an invoice for 24,000, and so according to the accruals concept, we should recognise an expense in our accounting period relating to the consumption of this marketing. So that means we should show 16,000 of expense in our year, and then 8,000 of it should be excluded. That belongs to the next accounting period. So we need to make an adjustment for the 16,000. We need to recognise an accrual for that. So it tells us in the text that this invoice is not included in the balances of the trial balance, and that marketing costs are treated as distribution costs. So our double entry in this case then, we need to debit our distribution costs and credit the accruals with the 16,000. Now notice that all the figures are in thousands anyway. So again, if we look at our trial balance, all the figures are stated in thousands. So we need to make an adjustment for 16, not 16,000. Again, just make sure that you're using the right numbers. So yeah, we've got a working for our distribution costs, haven't we? So we need to add an accrual for marketing. There's a further 16. And that's relating to an accrual. And in our statement of financial position workings, we've got trade and other payables. So yeah, so we've got a distribution cost here of 16 that we need to include. So we've done the debit and the credit for that figure. So now I'm happy to highlight the number. So yeah, I've used that. Next then, a salary of 50,000 paid to the manager of the distribution depot has been incorrectly classified as an administrative expense. So that means we need to remove it from the administrative expenses and put it into distribution costs instead. So our double entry is to debit the distribution costs and credit the admin expenses. Okay, with the 50,000. So let's look at our workings. Okay, so we need to increase our distribution costs. We're debiting distribution costs, but we're crediting our admin expenses. Okay, this relates to the 50,000 salary. Okay, so we've done the double entry for that. So let's highlight that so we know we've dealt with it. So what else? Trade receivables include a debt of 24,000, which is to be written off. Misty Limited classifies irrecoverable debts as an admin expense. Okay, so we need to write this off. So the double entry would be to debit the irrecoverable debt expense, but in this case it's telling us that should be the admin expenses. Okay, so we're debiting the irrecoverable debt expense account, and as we're writing it off, we're going to credit the receivables ledger control account. Yeah, so it's completely written off now. We're not creating an allowance for it. So we're crediting the receivables ledger control account with 24,000. So let's add those into our workings. So we've got our bad debt of 24,000. So yeah, we're debiting the admin expense and we're going to credit receivables. So notice I'm just calling it bad debt. In the drop-down menu, it may be called irrecoverable debt. So again, you have to choose from the drop-down menus. Right, so we've done the debit and the credit for that. So I'm going to highlight the 24,000. Next, the corporation tax balance. Okay, well, I was a bit confused about this earlier. So again, I'm just going to skip this for now. Let's move on to the next one. Perhaps the next one may be a bit easier. So land included property, plant and equipment at a cost of 2,300,000 was revalued to 3 million at the 31st of December 20x1. Yeah, notice the date there is important. They're revaluing it at the end of the year. If they revalued at the beginning of the year, then we might need to do some depreciation for it. But in this case, we don't need to do any depreciation because it's land, and land doesn't need to be depreciated. and also because they revalued at the end of the year. Okay. So it tells us this valuation is to be incorporated in the financial statements. Okay, so we've got a revaluation, haven't we? So the double entry for that, we're going to debit property, plant and equipment and credit the revaluation reserve, which is going to be shown in equity. Okay, so let's put the debit into our property, plant and equipment. Yeah, so we've got our workings, and we've got our revaluation of 700. There's our debit, and we're going to credit the revaluation reserve, and that's going to appear in our statement of changes in equity. So we can see that the third column is for a revaluation surplus, and the 700 increase is part of our total comprehensive income. Okay. Now that 700 also need to appear as part of our other comprehensive income right at the very bottom of our statement of profit loss. So that's not really a triple entry. We've written the number 3 times there, haven't we? But it's not a triple entry, it's a double entry because this figure is a credit and this figure is a credit. They're both the same number, but just presented in 2 different statements. Anyway, so I've done my double entry now, so I'm happy to highlight those numbers. Yeah, I've accounted for the difference, haven't I? And then the last note says all of the operations are continuing operations. Okay, so there's no number to do there, no double entry for us to deal with. Right, so we can't avoid it anymore. We need to look at this corporation tax, don't we? Because that's the one that we've been avoiding so far. So it tells us the corporation tax balance of 17,000, including the trial balance, was the result of an overestimate of the tax liability for the previous year. Okay, so what's going on here? So let's go back to the previous year, to 20x0. So we would have estimated our tax expense. So we would have debited the expense with some number and credited the payable with some number. And then in 20x1, we would have finalised how much we needed to pay to HMRC, and then we would pay them. So we would have debited the payable, again we don't know how much, and credited bank, and that would have settled our liability. But because we had overestimated the tax liability last year, it means that there would still be some carried forward balance on the payable. So what we need to do now is recognise, well, there is no payable anymore. Yeah, we have fully paid what we need to HMRC. So we would now remove the payable. So we would debit the payable with 17, which is the overestimate, and we would credit the tax expense with 17. So we now have 0 payable because we've paid everything, and we're going to show a negative expense in our profit and loss to recognise that last year we overestimated. And remember that this is an estimation, and IAS 8 says that if we make changes to estimates, we do that prospectively. We should not restate prior year figures. So we need to show this negative expense in our answer. Again, we can think about, should we put it straight into our profit and loss, or is there a working? Oh yeah, there is a working. Yeah, there is. So we've got our prior year. Here we need to show a negative expense of 17. Now we don't need to do a double entry for this, do we? Because that double entry has already happened. Yet the figure has already been included in our trial balance. So we can highlight that now. We have now put that 17 into our answer once. But what else does it tell us in the note? The corporation tax charge in respect of profits for the current year to December 20x1 are estimated at 210,000. So we need to recognise that we have an estimate for this year's tax, and that's going to be, like we saw just now, debit our tax expense and credit tax payable. Okay, so we need to debit our tax expense. Let's put that into our working. So we've got an expense of 210 and we need to credit the payable. Now normally a tax payable would be shown separately to other payables. So we can put that figure straight into our answer. Okay, so having done the debit and the credit for that, I can now highlight that number. Okay, so I think I've done everything, but let's just double check. If I go through all the trial balance, and I've noticed here that every number has been highlighted, and if I go through the further information, I can see that yes, every number has been highlighted. So as far as I'm concerned, I've put all the numbers from the question into my answer. So what I can do now is add up my totals in my workings and then transfer those numbers into my answer. Although I notice that I still have a blank working for retained earnings. I don't have any numbers in there. Well, I suppose we've got the brought forward balance, haven't we? But I'm not sure if we need to use that working because effectively it's replicating what we have in the statement of changes in equity. So I'm not going to bother putting numbers into the working just for the sake of it because effectively we're replicating what we have in our answer to task 1. Anyway, so we can now add up all the totals. Now remember, in your assessment, the totals will be added up for you in these workings. But I'm going to have to do that manually now, although so that you don't have to watch me add up the numbers painfully for you in this video. So we can just put the numbers straight into our answer. So remember, from revenue, we had our sales and our sales returns. So when we add up those numbers, it gives us 8,719. Our cost of sales comprised our opening inventory, plus our purchases, less our purchase returns, and less closing inventory, and that gave us 5,345. And that will give us a gross profit. So notice that there is a formula here, so this will work it out for you in the assessment. So we have, so we have 3,374 as our gross profit. Our distribution costs were the cost in the trial balance, plus we had an accrual, and we also needed to transfer some money from the admin expenses. So we have a total of 804 as our distribution costs, and our admin expenses were the number from the trial balance, the adjustment into distribution costs, and we've also got the bad debt. So that gives us 1430, giving us an operating profit of 1140, from which we can deduct the interest, giving us a profit before tax of 1076. And then our tax figure, so remember we had the tax estimate for the year, but we need to deduct the overestimate from last year. So we have a tax expense of 193, giving us our profit for the period of 883. So that's our profit from our operations, but we also had the revaluation of 700, giving us a total comprehensive income of 1583. So that figure of 883, that can now go into our statement of changes in equity. So as part of our total comprehensive income, we've got a profit of 883, giving us again the same number, 1583, as our total comprehensive income. We had no revaluation surplus at the beginning. Okay, there was nothing in the trial balance, was there? So we can see that we've got a total figure of here of 3879, and then we can just put in the other totals. Now these totals can go into our statement of financial position. So we've got all of the totals for equity, and they can then be transposed into our statement of financial position in the equity area. So again, just copying the same numbers for share capital, And then for the other figures, they can be copied across from the workings. So for our property, plant, equipment, we have the cost less the accumulated depreciation, and we've got a revaluation as well. For the receivables, so we've got our trade receivables, our prepayments, but remember we also wrote off a bad debt, didn't we? So we've got total current assets of 1633, and then when we add on our property, plant and equipment, we've got total assets of 6979. And then from our payables, we can get that from our working. So our total payables amount to 657, giving total current liabilities of 867. And then when we add on our loan, that becomes 1,767. And total equity and liabilities gives us 6979. And yes, it balances, thankfully. Now, if it doesn't balance, what can we do about it? So what you can do is compare the difference between these two numbers. Again, this is if it doesn't balance. And what is the difference? So it could be that that difference is just a number that you remember from our question. So it could be that there's just a missing number. Perhaps you haven't put a debit, or you haven't put a credit, or you've missed out one of the numbers from the trial balance. But what you can do, you can divide that difference by 2, and perhaps that's one of the numbers in the question. And in that case, it could be that you've put a debit somewhere, but as a credit by mistake. Okay, so yes, if the difference between the balance sheet is exactly divisible by 2 and you recognize that number, it could be that we've just put it as a minus instead of a plus, or a debit instead of a credit. Okay, so there we are. There's our debrief for tasks 1 and 2 of the drafting and interpreting financial statements assessment number 1.